Today we're going to be talking about how to make the most of your Medicare Part D plan. Stay tuned. Hi there, my name is Sarah and I'm here today with iHealthBrokers to talk all about Medicare Part D. Now, if you have any questions whatsoever, please feel free to just leave them in the comments below, or you can give us a call here at iHealthBrokers at 888-410-0344. We are licensed nationwide and there is absolutely no charge for our services, so please feel free to reach out if there's any way that we can help. And as always, please make sure to like this video so that we can get it out in front of other people who may be in need. And of course, make sure to subscribe to stay up to date on all things Medicare, because we do release these videos on a weekly basis. Now, if there's anything that you'd like us to know about your Medicare Part D plan, your experiences, or any videos that you'd like to see, you can also reach us in the comments below. So first, let's talk about Medicare Part D enrollment and late penalties. So you have a few opportunities to enroll in Medicare Part D. You can do so during your individual open enrollment period, which is the same as with Original Medicare and Medicare Part C, which is Medicare Advantage. So that's the 3 months before you turn 65, the month of your 65th birthday, and the 3 months thereafter. Now, you may also be able to enroll during a special enrollment period if you qualify. And then, of course, there's the annual enrollment period, which is every year from October 15th to December 7th. You've probably heard of the Part D late enrollment penalty. So if you go for a period of more than 63 consecutive days without creditable prescription drug coverage, then you may be subject to a late penalty. So you really want to make sure that if you're going to enroll in a Part D plan, that you enroll either during your individual open enrollment period or that special enrollment period if you qualify, because if you wait, then you may be subject to a late penalty. But is it that big of a deal? So what is this late penalty and how is it calculated? So basically, if you go more than 63 days, then for each month thereafter, you're going to be charged 1% of the national base beneficiary premium. So what does that mean? So in 2021, that premium, that base premium, is $33.06. So if you go for 63 days plus 1 month, you're going to be charged 1% of that on top of your monthly premiums once you do enroll in a Part D plan. And you're going to be charged that in perpetuity. That gets tacked onto your monthly premium pretty much forever. Now, if you go 2 months, then it's going to be 2%. 3 months, 3%, and so on and so forth. So that sounds scary, and yeah, you could be throwing money out the door. But let's break it down. We really are talking about a rather small percentage. So even if you were to go a year without creditable prescription drug coverage, then right now you're still looking at less than $4 additional per month. So let's be honest, if you really do not need prescription drug coverage at this time, then waiting a small amount of time and possibly accruing an insignificant late penalty might not be the end of the world. It's probably not. We're only talking about a couple of dollars. However, the longer you wait, the more significant that cost becomes. So we strongly encourage you to think ahead, because the truth of the matter is, eventually, we all need prescription drug coverage. As we get older, our prescription drug needs change. They get more significant. And late penalty aside, you don't want to be without prescription drug coverage when you need it, because that's when the bills get really significant. While we're talking about saving money, let's talk about picking the right plan. So yes, Medicare Part D plans are federally regulated, but they're offered by private carriers. And these carriers can choose to offer better benefits to compete for your business. So as of 2021, your deductible can't be more than $445. However, some plans may choose to lower the deductible or waive it entirely to compete for your business. But Don't be fooled. Generally speaking, these savings are going to be offset with perhaps higher monthly premiums or higher copays. So if a plan seems too good to be true, it may be. It really just depends upon your needs. We're going to get more into the deductible later in this video, I promise. Now, if you're someone with extensive prescription drug needs, then maybe a plan with no deductible or lower deductible but higher monthly premiums might be the right plan for you. It's always a matter of balancing your needs and your budget, which is why we always recommend working with a licensed broker. However, if you want to go at your own, simply log on to Medicare.gov and access the Plan Finder. And on the Plan Finder, you can even compare the costs of prescription drugs on different plans. So if you know what medications you're currently taking, you can compare those costs with different plans to see which one might be right for you. You may also qualify for the Extra Help program. Extra Help can help to lower your monthly premiums or waive them entirely. It'll also help to lower your out-of-pocket costs when actually paying for a medication. However, there are specific income and asset criteria that you have to meet in order to be eligible. So in 2021, if you make below $1,630 or $2,198 for a couple, and your asset limit is up to $14,790 or $29,520 for a couple, then you may be eligible for partial extra help. So your premium is going to be determined by your income. There's a $92 deductible or the plan standard deductible, whichever is cheaper. And then you have a 15% coinsurance or the plan copay, whichever is less. And after $6,550 in out-of-pocket drug costs, you'll pay $3.70 for a generic and $9.20 for a brand name, or 5% of the drug cost, whichever is greater. I know that's a lot of numbers, but basically, if you meet that income limit and that asset limit, you're definitely going to want to look into it because it's a major savings. And there's another opportunity here. If you make up to $1,469 or $1,980 for couples, and you have an asset limit of up to $9,470 or $14,960 for couples, then you may qualify for full extra help, which means a $0 monthly premium, so no monthly premium, and no deductible. And you'll immediately be eligible for a $3.70 generic copay and a $9.20 brand name copay, and again, no copay after $6,550 in out-of-pocket drug costs. So basically, you have two opportunities here. You have a lower income and asset limit, which will give you full extra help, and then you have a slightly higher income and asset limit, which will give you partial extra help. Both options are a great way to save money on Medicare Part D. Now remember, if you're enrolled in a Medicare savings program, you may be automatically enrolled in Extra Help. We've got a video that's dedicated entirely to Medicare savings programs, and I'm going to put that in the description below, so make sure to check it out. Now, you may or may not have heard of the dreaded Medicare Part D donut hole, also known as the coverage gap. Basically, you want to avoid this donut hole at all costs. Medicare Part D has 4 stages, so let me break it down for you. There's the deductible, the period of initial coverage, the coverage gap or donut hole, and then there's catastrophic coverage. So first you have the deductible. The deductible is the amount that you have to pay out of pocket before your insurance kicks in, and at that point you'll be responsible for copays. In 2021, the max deductible has been set at $445. This is set by the federal government. However, a plan can choose to lower the deductible or waive it entirely, as we discussed earlier. Once you've met your deductible as specified by your plan, you'll move into the period of initial coverage. At that point, you're going to be charged a copay dependent upon the tier of your medication. This is basically where you want to stay. Now, once you reach the next max, which in 2021 is set at $4,130, you're going to enter into the coverage gap, which is the donut hole. Unfortunately, once you're in the coverage gap, you're probably going to see your prescription drug costs jump quite significantly, because at this point, instead of being responsible for a copay, you're going to be responsible for a portion of the drug's cost. So like I said, you're probably going to see your costs go up quite a bit. So what do? Ideally, you want to stay in the period of initial coverage and avoid that donut hole at all costs. So we advise that you keep track of how much you're spending on your prescription drugs, because your carrier certainly is. And once you've reached that cap, you're going to move into the next stage, which is the coverage gap, where you don't want to be. So if you need to take something like a generic antibiotic or something like that, perhaps you want to pay for that out of pocket rather than billing your insurance, because the cost is not going to be very significant, but it's less for your insurance to keep adding up and adding up and adding up, getting you closer to that dreaded donut hole. So if you have lower cost medications, generics that you can pay for out of pocket, number one, you may notice that the cost is pretty similar to what you might be paying with insurance. And number two, it's going to keep you further away from the donut hole, which is where you want to be. Finally, let's talk about insulin. So many plans participate in what's known as the insulin savings model, which provides participants with a 30-day supply of insulin for $35. So if you're someone that relies on insulin to manage your diabetes, then you may want to look into a plan that participates in one of these programs. However, this advice can really be applied across the board. If you know what medications you take, when you're looking to enroll in a plan, see what your plan would charge you for that medication so that you can make the most informed decision possible. The more specific you can be upfront about your needs, then the better your chance at picking the right plan for those needs. If you like this video, please make sure to click like, and as I said earlier, please subscribe as well, because we do release these videos on a weekly basis. We talk about Medicare, how to save money on Medicare, and health insurance in general. And if you have any questions or comments, you can reach us in the comments below, or you can give us a call here at iHealthBrokers at 888-410-0344. And one of the best ways to make sure that you're getting the most out of your Medicare Part D plan is to use a broker, use an expert who can help guide you toward the right plans for your needs, because health insurance is confusing. And of course, make sure to review your plan every year during the annual enrollment period, because benefits do tend to change and you want to make sure that it's still the right plan for you. Don't take anything for granted. Thank you so much and have a great day. Bye-bye.